Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live discussion of weekly strategy roundtable. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Am I here? Am I here? Trader all good. Faust, Patrick. No slide. You should be able to see the slide. It should say weekly strategy roundtable. Good morning, Faust. Patrick just got it. Okay, perfect. All right, let's start. Am I here? Welcome to Tradespoon. My name is Vlad Karpel. Trader all good. Founder of Tradespoon. And today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions, how to navigate no slide. You should be able to see the slide. Are we trading in a bear market? Are we trading in a bull market? Should say weekly strategy roundtable. Good morning, Faust. Any questions? Just got it. Okay, perfect. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Welcome to Tradespoon. Trader all good. Founder of Tradespoon. Today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions, how to navigate no slide. You should be able to see the slide. Are we trading in a bear market? Should say weekly strategy roundtable. Disclosures are very important. Trading stocks and options. Any questions? Okay, perfect. You must be those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Welcome to Tradespoon. Trader all good. Founder of Tradespoon. Today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions. Financial advisor prior to making any trading decisions. All right, before we get into a trading plan, everybody wants to know where is the bottom, right? And how do you navigate market volatility? Market has been volatile, QQQ turning negative as we speak. So what to expect next? So let's look at spiders. So market had a steep pullback, right? As a result of the last week we had CPI data, right? Worse than expected, and interest rates went up instead of 50 basis points by 75 basis points. Market did rebound back to the 385 level, and then we had a follow through yesterday in terms of higher than expected interest rates rise in Europe, Swiss bank, Britain. Etc. So you have this strong wave A, you had a short rebound B, and final C, right? And then the question is, how far is the C gonna go? Looks like we're retesting yesterday's low, actually making new lows in spiders. And how far can we go? So the main driver for the current market is are the interest rates, right? Interest rates actually had a significant pullback. We're retesting the 3.2 level, the same level that we were at prior to the CPI data, right? CPI data was on June 10th. Right, and then the market it rallied, broke through the 3.2, and now we retrace back to this breakout level. So I actually think this is a positive news for the bulls, right? The stabilization in interest rates. This is again kind of a major support, 3.2, going back to the beginning of May. But the fact that we are not continuing to make new highs and going vertically higher interest rate, I think it's positive, despite the rise of interest rates by the Fed and by the ECB and Swiss bank. So I think the bond market is actually more accurate when it comes to next move and direction, right? So short term, I'm cautiously optimistic, right? I think market is extremely oversold. The reason we sold off, in the past week was because worse than expected inflation data and more aggressive tone from Europe and from United States in terms of rise of interest rates. I think the sell-off is overdone short term. It's overdone short term. So the positive news, I think interest rates are stable. They're not heading vertically higher. They're retesting key support level and similar price action in the dollar, right? Strong pullback in the past 2 days after the CPI data, almost back to again, retesting the June 10th when we have the CPI data, rebounding back, but again, stable. So if the dollar continues to rally, let's say next week, right? If the dollar continues to rally next week, right, that would be bearish for the market, right? This would be negative for spiders, right? If the next week we kind of retest this level and pull back further, right, that would be positive for the spiders. The strong dollar is if the companies derive their revenue from the outside of the United States, then strong dollar impacts the revenue. We already have pre-announcements from Microsoft and CRM, basically kind of stating that the revenue going forward will decrease as a result of this vertical move in the dollar. It will probably be reflected in the earnings season that's coming up in July, right? We have July 15th. Earnings season. So this vertical move in the dollar is long-term bearish for the market. Short-term, again, overdone and probably due for a pullback. So the dollar and the currency, I think, is bullish for the market short-term. So my view on the market again, look at spiders. Let's look at the long-term trend. We are about 25% down, right? We're 25% lower. I think somebody said average recession is about, or average bear market, let's call it, average bear market is about 30%, right? So in my opinion, I think this pullback, again, we're probably getting close to the end, right? The short term. Close to the end, right? The C pattern, it capitulates somewhere, right? Where usually I have, you wait for 2 days, right? We need to have 2 to 3 days of higher highs and higher lows. As long as the market trades below 380 level, nobody really knows where the bottom. I think because of the interest rates and the dollar, we are approaching, the sell-off is probably in its final phase, the short term in the final phase. And I still think going into the earnings season, we will have a rally. But in terms of the bottom, I don't know where it is, right? We need to see at least 2 days of higher highs and higher lows, as opposed to the opposite. You can clearly see that technology is outperforming. Technology is outperforming the spiders, right? And there's still a lot of weakness in value stocks. But nonetheless, I think short term it's coming to an end. So the way I would think about the market right now, there are 2 scenarios, right? There's 2 scenarios. One is dollar and interest rates stabilize, right? Or even pull back. Dollar continues to pull back, interest rates continues to pull back, and we have a rally, right? We have a rally back to 420 level. Right, to retest this levels, or at least 400 level, right? That's scenario number 1. Going into the earnings, right? July, we have earnings starting in July. So that's scenario number 1, right? And it's a significant rally, right? The 60 point, it could be up to 60 points from here. Or market breaks down, right? We have some other negative news, or just the momentum kind of, we had 9 weeks of downward momentum. We might have another 9 weeks of stock market continuing going lower. Or we drop by 60 points, right? 300, right? Somewhere by 300. or at least next level of support is around 320. Right, this is, everybody is talking about a market reaching the pre-pandemic high, right? Pre-pandemic high. This is where the pandemic started. Pre-pandemic high around 320. So you have minus 40 points to the downside, right? And then we'll call it plus or minus 40 points to the upside. And then the question is, which event happens first? This is how I decide, am I going bullish, am I going bearish? So I'm going to pose that question to you guys. Think about it, spend 30 seconds, a minute, and just type in which event is going to happen first. Are we going to get close to 400, 420 level, or are we going to get close to 340, 320 level? Which event is going to happen first in July? And type in your answer. Sunil, good morning. Okay, bullish first, one first, Dan one, Bruce two. Okay, good morning, Carmen. Day one, Mark two. All right, so okay, good. Anyone else? So half of you guys said two, half of you said one, right? Half of you said market continues to pull back, similar that we did in April. Half of you said market rallies one. I'm going to go with the bulls. I think market does go back to somewhere between 400 and 420 in the next couple of weeks, right? This is a little bit overdone. I thought 380 level will actually hold. It didn't, primarily because CPI data was worse than expected and interest rates, were more hawkish tone from Europe and United States, which pulled the market down by 5%. So it makes sense. So then the question is, where's the next move? So I think we do something like this, right? But then we do break through this 380 level. But this is now a key overhead resistance, right? 380 is key overhead resistance. This is, one scenario, right? This is my course scenario that it's going to happen this way. But obviously next week, we can overshoot again to the downside, right? That has been the pattern, kind of undershooting to the downside, but still think we're going lower, higher. So that's my view short term. Long term, right? Now we're going into October, right? October, November, right? Again, same scenario. Which scenario is going to happen long term? Is it scenario 2 by October 6th, scenario 2 or scenario 1? Why are these questions important? Like, why are we doing this exercise? Because, well, that's how you should, make a decision in terms of your portfolio composition, right? If you said 1, then maybe it's time to start closing some of your short position, right? I have, let's say, SH. SH is short. Maybe it's time to close it. I do have spreads. I own, most of the position either stock or spreads. Maybe I can start breaking the credit, debit call spreads and close the short call, right? So those are some of the decisions, I would have to make based on my view. If I said 2 by July, then, then it would be the opposite. I would add to SH, maybe close some of my debit spreads, and that's how I would trade. So very important decision. So this exercise is extremely important, right? We were talking about before, kind of writing a contract for the past few weeks. When the market is so volatile, right? We haven't had move like this. I mean, last time was 2018, right? But even 2018, it lasted only 4 or 6 weeks. 2020, right? The 6 months of downward market, 6 or 7 months of downward market, we have not experienced, probably even worse than in 2008, right? It's probably closer to, internet bubble in 2000 to 2003 recession, right? That 2 to 3 year recession as a result of internet bubble crash. Maybe only then it's compared by the velocity of the move, when you talk about the magnitude of the move and the time it took. So this happens only once every 10 years, once every 20 years. So it's hard to model it. But so it's important, especially in this condition, to write a contract, right? To write a contract. What does the contract mean? I mean, you can write if you trade in a group or you trade in the live trading room, you can send your contract to me, right, via email, or you write a journal, right? And in the journal, you write some kind of a contract. Basically says, here's what I'm gonna do, right? I propose in the contract to just say that 4 positions. I'm only gonna have 4 positions, and I'm gonna exit these positions if they reach 2.5% drop in account value, right? So limit your losses to 10% of account value. All right, so these future rehearsal exercises are important because you go through these scenarios, right? July, if you're a short-term aggressive trader, if you look October, then long-term investor, right, or medium-term trader, right? And then once you decide 1 or 2, you write a contract, right? That the trade goes in your favor, where are you going to exit? If the trade goes against you, where are you going to exit? All right, so 2 long-term, both, thank you. Mark 1. Mark 1. Long-term 1s, okay. So by October, everybody thinks 1. Nobody thinks 2 by October? Or we're just not participating? Yeah, so just tell me, now the question is second, by October, where's the market going to be by October? Will it first reach the 2 or will it first reach 1? Which event is going to happen first? Carmen, we'll talk about it. Okay, thank you, Carmen. Done 2. All right, by October 2, Bo, they up move. All right, so also mixed crowd, maybe 50-50. 50 said that we're gonna have 421st by October. I'm in the crowd where we're gonna have, I'm gonna say 2. Right, so short term, I'm cautiously optimistic that market never moves in one way. We have this 25% move almost with very little breaks, maybe 1 or 2 weeks of upward momentum, right? So very few breaks. I think the move is exaggerated. All the negative news are already factored in. You need any kind of positive news, whether it's PCE data, next week, or employment data, something that will push the market to the upside. And you can see that already that technology is outperforming, right? Technology is outperforming the spiders, which hasn't happened for quite some time. So now the value stocks are underperforming. So I would rotate. If you've been hiding, right, one of the most popular trade in as of today, and you were hearing this on the news all the time, hide in high paid dividend stocks, value stock, Goldman Sachs, Altria, utilities, consumer staples. I think that trade is over, right? And it's been over probably. So I would rotate out of the value stocks, right? Short term. And we're talking about 2 types of traders, right? There are 2 types of traders, in what I understand, right? You can be aggressive, right? Aggressive short-term trader, right? If you're aggressive short-term trader, meaning you think about days, you may be thinking about weeks, right? And you have a very well-defined stop levels, right? You don't convert trades into investments, right? One of the most common mistakes we all do is we take trade and then convert it to investments. If you're not that type of trader, if you're a short-term aggressive trader with well-defined stop levels, and you don't convert your short-term trade if it goes against you into investment, right? If that's the case, then I think right now this is an opportunity to go long, right? Or at least consider going long, right? And maybe trim some of your short positions, right? The second type of traders where, you know, very often you take trades and you convert them into investments, right? How many of you guys do that? You know, you put on a trade, you have some mental stop level, and then trade goes against you, and you say, oh, it's okay, I'll wait. It's not going anywhere. Done, thank you. Well, how can I tell technology outperformed? Because QQQ is, you know, basically flat and spiders is down 1%. All right, done, thank you, Kevin. Thank you. Current thing all the time. Yes. Okay, so we'll all do this, right? So if you are still kind of in that mode where you take the trade and convert into investment, then the strategy should be, you know, you sell into rallies, right? You don't go long, you don't add new position, right? You don't add new positions, you sell into rally, right? So if you're still kind of struggling, where you're not sure if this is a trade or this is an investment, and especially if you're down more than 10%, right? This has kind of been the rule, 4 positions and 2.5 stop loss, right? So if you're down more than 10%, especially, you know, in the past months or two, I would consider selling to the rallies. Probably not capitulate now because market is oversold, but, you know, if we get to, I don't know, 390, 400, 420, you just close your long position. That's what I would do if you're this type of trader. I know we have a lot of day traders kind of looking for signals, but they're very aggressive, right? They're looking for these short-term price fluctuations. Great. I think I would be probably consider closing some of your short positions and get more bullish. We are heading into the long weekend, right? So we'll see where we're going to close. Market has been volatile. We also have expiration Fridays, so I do expect more volatility, but you know, I'm cautiously optimistic that we are close to this short-term pullback, right? All right, any questions? All right, we're all making the mistake. I mean, I make that mistake too. Converting trade into investment. What I try not to do is cash, right? Why is cash? Yesterday was a great question. You know, we had a discussion. We still never had a capitulation, right? We had this discussion yesterday. Is VIX going to 40, you know, or above 40? I kind of said, eventually, nobody knows exactly when, but we have to break through this level, right? We'll call it 40, right? Let's call this 40. Right. This is a weekly chart. Eventually, all of the bear market, all of the, you know, markets currently end with some kind of capitulation where VIX reaches extreme levels, right? In 2020, you know, it was 84, right? In 2019, it was, you know, 36. In 2018, it was 50, you know, in 2015, it was, you know, also 50. Let's see. In 2011, it was also 50. So around, you know, 50, most of the events, 50. If it's a really bad event like Lehman collapsing, you know, 80, right, or 96. Lehman collapse, 96. The pandemic started, right? All the economies are closed, you know, 90, right? 80, 90. You know, if it's Greece defaulted or Italy defaulted on its debts, then it's around 50. Right? It depends on the magnitude of the, you know, if it's a war in Iraq, it's 48. If it's September 11, you know, it's 50. if it's internet collapse of the internet stocks around 50. I think it was actually higher, but you get the picture, right? So we probably, the current market condition probably warrants at some point the market get to 50, 60 at least. I assume, hopefully we're not going to have some, another black swan event, but somewhere around 50, 60 level. And what does that mean? That means that we're longer term, whenever that event happens, whether it happens next week, or in July when the earnings starts, or October when midterm elections, on November when we get close to the midterm elections, at some point VIX is gonna go do this, right? When VIX does this, right, or this, not sure when, don't know when, but something along those lines, then we're heading lower, right? We're going to head significant lower. And then the question was, well, then what happens after that? Well, historically, what happens after that, right? This is where you might not be able to determine exactly the bottom, but this is going to be close to the bottom. Because right now the question is, are we close to the bottom? And every day you turn on Bloomberg and CNBC, and somebody says, well, we're going to close this. Before, everybody said we're going to close this year at 480. And every time market goes down, then it's 440 and then 400. Now everybody says 380, right? And then the bottom, last week, everybody said that the bottom is going to be at 350. This week, everybody says the bottom will be at 320. Months from now, the bottom, people are going to say 280. And then the lower the market is going to go, the lower that bottom is going to be determined. So nobody knows exactly where the bottom is. But once VIX jumps to 60 and 80, maybe it's better to do it sooner than later, right? Hopefully it's actually going to happen in the next couple of weeks. Then at least we know where that bottom is. But until that event, you don't know where the bottom is. I thought 350 to 320 2 weeks before. Now I'm thinking about, well, 320 to 240, somewhere in that region, right? And then the lower this price goes, the lower that bottom is going to be, because we're guessing. We're guessing, but I know that historically that once VIX does jump to 60, 70, 80, this is where you need a lot of cash, right? That's why that rule about cash is very important, right? Because if right now you put on the trades, you convert them from trading to investments, right? And you kind of basically said, Vlad, you know what, I don't care. Nobody knows where the bottom is. So I'm going to just sit and wait, right? A lot of my friends basically said, nobody knows where the market is heading. I'm just going to sit and wait. And my response was totally fine. You can sit and wait, but then how much cash do you have? And they're like, no, I'm all in cash. I mean, I'm all in equity market, right? Or I'm buying margins. And that I think is the biggest mistake. Certain things you don't know, like where the bottom is, I agree, you don't know, but certain things you have control over, like cash. So I know personally, once VIX reaches 50 and 60, this is probably going to be a very rare opportunity that comes, every 10 to 20 years. We had it in 2020, now it's, we're going to have, before that, 2008, where once the market pulls back 30, 40, 50%, however much it's going to pull back, and you have the jump in VIX, I need cash. So if I converted all my trades into investments and I don't have any cash, well, you're assuming that 363 basically is the bottom. And most likely it is not, right? Most likely the bottom will be once VIX reaches 60 and 70 level, which it hasn't happened in the past 6 months. It might not happen in the next 6 months, but we are still trading with lower lows and lower highs. So my message is, you're going to hear, a lot of opinions about where is the bottom in this market. And one thing I know for sure, that every week we make new lows, that bottom is going to go lower and lower and lower, right? Most reliable tool on the market, it's biased opinion, so you don't have to. This was more of a joke, but in my experience, obviously we developed a Tradespoon, but I would look at 6 months, right? I would look at the 6 months prediction to tell you, based on the current market conditions, what do you think the bottom is going to happen, right? And right now, the model actually sees that. Sorry, this is 10 days. Let me remove that. 6 months. So the model identified that the bottom is somewhere around 350 through 330 level, right? Based on the data we've collected up until June 1st. Now that the market is trading 5% lower than 387, then it's reasonable to assume that we're probably going to be 5% lower than 338, right? So around 300 level. So if I have to guess based on the current market conditions, the bottom is near 300 level, assuming things don't get worse than expected, right? Assuming that next month, once the model recalibrates, we are staying within this range, right? We didn't stay within the range in May. May, the sell-off accelerated. In June, the sell-off accelerated. We need to have at least a couple months where we don't reach the low that the model has predicted. Because every time we are trading below the lows, all it means that the sell-off is going to accelerate, right? The sell-off is accelerating. So that means we're not going to drop, 25% plus 10, 35. If in July we also have worse than expected months, and CPI data is going to be worse than expected, then that bottom number is going to continue going lower, right? Continue going lower. So that's a very important concept. So a very important exercise, right, in psychology to zoom out, right? Right now, everything is horrible, right? You look, it's like, if you're driving on the highway and somebody yells at you, right? Or somebody cuts you off, right? What usually happens? Or the better example, you have a tire, right? You drive on the highway, the tire blows up, and you're extremely mad, right? You're late to an appointment, you can't pick up your grandchildren, you're extremely mad, right? What is the exercise that psychologists suggest? Zoom out, right? In 3 days, you will not remember that flat tire, you will replace it, and you will never remember this day. Your life goes on. With the stock market, is the same thing. Right now, everything is horrible, right? Consumer confidence is at its lowest level. Dollar is at decade high. Interest rates are at decades high. Market pulled back 25%. Everything is horrible. 3 years from now, most likely you will not remember this at all, right? Probably a couple weeks from now, a couple months, you'll still remember. But 3 years from now, you won't remember this. The only thing you will remember, most likely, is that this was a kind of a generational opportunity, but only for those who have cash, right? Only for those who have cash. So even though this slide never changes, I always say, keep 30% of your portfolio in cash. Since the beginning of this year, January, February, I said, keep 50% of your portfolio in cash. So if you have 30% of your portfolio in cash, or if you have 50% of your portfolio in cash, a lot of people are actually start buying, right? They basically say, well, Vlad, you don't know where the bottom is. CPI data in July is going to be better than expected. And maybe Microsoft, has double-digit growth instead of single-digit growth. And maybe we're close to the bottom right now. So half of the people think this way and they start buying, right? Maybe not all in, right? Maybe they only put maybe 20% of your cash, I would suggest for those who don't know where the bottom is and don't like to call the bottoms, and you're a long-term investor, maybe take 30% of your cash, right, and buy now, right? And then maybe you put 30% here, and pendulum always swings to extreme, and then I would say maybe 30% here, right? And then you can wait, right? Then you don't know where the bottom is. Once we reach this level, we might even go here, but at least we're close, and at some point we will be here, right? In 3 years or 4 years from now, we'll be here, most likely, right? We'll see how long inflation lasts. But, the core case is that 3-4 years from now, unemployment is still low, companies are still growing. So 3 years from now, we will be here. So if you bought it here, or you bought it here, or you bought it here, and the market is there, well, that's pretty large moves, right? Pretty large moves. This is where you're going to have, double-digit returns on your portfolio for years, right? but you have to be patient, right? And you have to figure out at least where there's two things, right? A few things. One, you need to be patient, right? You need to be patient. Right? Patient means to me is, you have to be able to zoom out, right? Zoom out. And have long-term outlook. And three, when the VIX is equal to, I don't know, somewhere between, let's call it 50 to 80, you have to have cash. Right? You have to have cash. Right, so most people short-term, it's very hard to time the market. I've been trading for 25 years, and timing the market is very difficult, right? I thought we're going to have rally in April, we didn't. I thought we're going to 380 is going to hold, we didn't. So timing the market is very difficult. Why? Because of the news, right? CPI data is worse than expected, 380 level doesn't hold. If it was better than expected or as expected, then 380 would hold. So these short-term trying to, time the market, only very aggressive, disciplined traders, can do this. For majority of the people, investors, you have to have a little bit longer term outlook, and this is the recipe. You have to be patient, you have to be able to have a long-term view, and you have to have cash, right? Because right now, if you're a long-term investor, you have zero in cash. From my perspective, I think you're making a mistake, right? Because I think, in the next 6 months to a year, you will have an opportunity to invest at much deeper discount than current discount of 25%, right? If somebody says, well, we are at 25% discount, right? But then, and I have this discussion with my friends, because they are making the same, mistake. People don't usually listen. They usually want to learn on their own mistakes, but that's fine. But, a lot of people do listen. So if I tell you you have 25% discount, but I said there's good chance you might have 35% discount, right? And maybe there is a tiny chance you're going to have a 55% discount, then why would you put all your cash right now, right? That doesn't make sense to me. You put some because maybe the market will never be on the 35 to 55% discount. So then yes, you need to put cash, right? And you can wait. You'll know it if we have 2 or 3 months of higher highs, right? If we break above, at this point, above 440 level, right? If we're trading above this level, then you know that this was an opportunity, right? But once we are above this level, you're probably not going to have another opportunity like this. So, but you can wait 2 weeks to at least see whether this is the bottom or not, right? You have at least 2 weeks of higher highs and higher lows. We haven't had that since March. March we had 3 weeks of higher highs, higher lows. We haven't had that since then. So you need at least 2 weeks of higher highs and higher lows to at least try to figure out that we're close to the bottom. For now, we just haven't had that. So that I think is the right mindset, right? One right mindset, which I think half of the people have, is that I don't know where's the bottom. I'm going to take my cash, divide it into 3, 4, 2 parts, and I'm going to deploy it here. 25% discount sounds like a good discount. 35% discount, average recession sounds even like a better discount. And then if the pendulum swings to extreme during midterm elections, okay, then 55% discount. So that's totally fine approach. Another approach, maybe somebody more experienced or who does believe in technical analysis and VIX, basically said, it's too early to be opportunistic. I wait. Because 25% discount is just not enough for me. I want to wait for 35%. That's someone like me. Someone like me, I basically said for majority, dumbbell, you have a barbell approach, right? A lot of people reference barbell approach, right? What does that mean? That see extreme and conditions, in small part of your certain part of your portfolio, you are trading with these dumbbells. But majority of this, it's cash, right? It's cash or treasury or something that is not going to move significantly. And I think for majority of the people, that would be the most optimal approach, right? You trade options, you trade futures, you try to be opportunistic short-term, but you are waiting for these deep discounts. Majority of your money, you're waiting for the deep discounts. And I think 25% is not enough. I think 35% is, in the next few months, is reasonable to assume we will get that discount or close to that discount. All right. Any questions so far? Let me just make sure I answer all the questions. So, Carmen, hopefully I answer your question. Long term, if you're, 401k or you're a long-term investor, cash is the most important, right? Nobody knows where the bottom is. My strong conviction that we have not reached the bottom. I think we're in the beginning of the bear market. I think it's going to get worse before it's going to get better. And that seems to be the consensus, and almost everybody is bearish. Well, I know we are probably getting close to the bottom, right? So, and that's usually how it works. So I would watch the Bloomberg NBC. The bottom is usually when you have somebody like, Aikman comes out and says, the world is coming to an end. Then we're close to the bottom. Right now, we still don't have Aikman coming out and say that the world is coming to an end. So we're probably not at the bottom, but once Aikman or somebody like Aikman comes out and say the world is coming to an end, or Warren Buffett starts buying Bank of America structured notes, warrants at a deep discount, then we're close to the end, right? Until then, then we're probably not to the bottom. Thank you, Carmen. Don, I agree. I mean, any type of rallies we will or will not have, these I would consider them as bear rally in the market. Market is extremely oversold. I would not be surprised if the market reaches, at least 400 or 420 level, which is a pretty significant move, 10 to 15% move. We had it, 14% move in April. We had, 10% move in May. At some point, we will have 10 to 15% move, right? It will repeat itself. But they're all, by definition, are rallies within the bear market, followed by lower lows and lower highs, and that pattern will probably stay here throughout, at least until October. At least until October. Don, thank you. Kevin, thank you. Carmen, if you long-term stocks that you wanted to buy, they're all at the discount. First of all, they have to have positive cash flow. So as long as the stock has a positive cash flow and growing, still a double digit, then you would buy it. Whether it's Amazon or Apple or Microsoft, we know all of them. So if you're a long-term investor, Disney, all of these stocks, they're at a huge discount. They trade very highly to each other. I would just buy stocks that pay you dividend and have, positive cash flow and, at least as of right now, have a double-digit growth. If you have double-digit growth as of right now, then you pay dividend and it's a cash flow positive company with low PE, I would buy it, right? Microsoft, Google, Coca-Cola, stuff like that. Carmen, Kevin, thank you. Thank you, Carmen. Faye, audio's gone. Oh, now it's back. Okay. Faye, thank you. I would not buy VIX. I've been disappointed with VIX. I think it's slightly manipulated. I mean, if you want to trade futures, buying VIX, again, you're trying to time the market. And you know my opinion about trying to time the market. I mean, I would rather, if you're concerned and you want to hedge, I would if you want to hedge, right, if you said too, right, that the market is going here, right, if you said first is going here, I would not buy VIX, right, because VIX has been trading in a well-defined range. All right, the problem with VIX that it's been trading in a well-defined range and it's over, right, at 36.40, it's overbought, so I wouldn't buy it, right? And you don't know when VIX is going to jump above 40. You really don't know. Right, it could be next week, it could be in July. It's whenever we have really bad news, and probably not that CPI is worse than expected. Right, we had CPI worse than expected. Market dropped 10%. VIX didn't move anywhere. Right, so for VIX to go above 40, you need to have some kind of an event. In the history, it was pandemic started, Lehman collapsed, defaulted, war in Iraq, September 11. Something of that magnitude has to happen in the market for it to, flush out, right? Or just panic, lack of liquidity, right? Everybody is concerned about liquidity right now in corporate bonds, in mortgage-backed securities. Okay, if there is a crunch in the corporate, in the debt, right? Like junk bonds. I was a little bit concerned about junk bonds, kind of a vertical move to the downside, but again, extreme volume, similar to volume, almost the same volume is in March 20. In junk bonds. So that could cause the VIX to go up, right? Right now it didn't, right? So we have basically a panic in the junk bond market this week, but VIX still didn't move. So you need something of that magnitude, and when is that going to happen? Nobody knows. Try to time it. I would not do it. Top 2 or 3 lessons you've learned. Sunil, I think I said it. Cash. Always have to have cash. So top things I've learned is to be patient, which is not my nature. So I have to kind of learn, right? Patience. Kind of zooming out. That's number 1. Number 2, cash is the king. And number 3, if you're trading options, treat them as stocks, right? That's why I said options are derivative of stocks. What does that mean? I use options as a stock substitution, right? But still, for me to have 40%, this is a common mistake. We're all make mistake of this. But if I say 40% cash, let's say you have $10,000 account, right? You have $10,000 account, right? And let's say you wanted to trade QQQ, right? One contract of QQQ is $27,000, right? So you go in and you sell one contract, and it could be spread. Maybe like we have what do we have? 280. We have 280, right? 260 put spread right now. Credit put spread, right? Well, 280 to 260 put spread, right? By different, you're still tied $27,000, right? And I think that's a mistake, right? To have $27,000 on a $10,000 account, you don't have 40% of your portfolio in cash. As a matter of fact, everything is, my definition, everything is tied into equity market. You don't have a luxury to buy, right? If we have a sudden move to 260, well, here you have 20 times 1, right? 20 times 1 contract is $2,000. So then it's okay. But let's say you have 4 of these contracts, right? You have 4 of these contracts, right? then you don't have 40% of your cash. You have $8,000. So one thing that I learned, and most common mistakes that, and same thing, whether you're buying debit spread or credit spread, you always have to think about how much, especially people who sell short puts, out of the money puts, right? If you're selling out of the money puts, whatever that strike is, right? You don't know where the bottom is. You sold one contract of QQQ put, you own $27,000 of QQ. No matter how you slice it or dice it, that is the biggest mistake most traders make, including myself, right? That is the biggest mistake. You don't have 40% of your portfolio in cash, right? I have this argument with my cousin always. He's like, I have 40% of my portfolio in cash because I look at my balances and it says 40% cash. Just because your balances says 40% cash, when market moves down 10%, all of a sudden you only have 20% in cash. Why? Well, because your short position is going against you in very rapid move. So it's all about options equals stocks. It's the same conversation about size, right? Size does matter, right? Some people think size does not matter. I think size does matter, right? So size is extremely important, right? And to me, especially if you stock trade, well, you can really, then yes, if it says 40% cash, you're 40% cash. There's no other way to interpret that number. A lot of you are trading options, right? A lot of us are trading options. Well, then, to me, the options could be great because they give you leverage, but the reverse is also true. They could be horrible, especially in the bear market, when you are, selling, credit put spreads, right, or credit call spreads. Buying calls, same thing, right? At least if you're buying out of the money call, if you spend however much you spend on that long call, at least a majority of the time it will expire worthless, but at least what your maximum loss is, right? So always treat option as a stock, right? Translate. So for that reason, when you trade options on the $10,000 account environment, on a $10,000 account, I would just do one contract. I don't care what you trade in, $20 stock, $80 stock. I either do one contract or don't do anything, right? On the $10,000 account, maybe you can sell one contract of QQQ put spread, right? Maybe that's not the right strategy for your account size. Right, you hear a lot of strategies on CNBC, on Bloomberg, a newsletter. They say, go sell this, buy that. Well, they making a general recommendation, right, or general idea that might not be optimal for your account size, right? So something, especially on the smaller accounts, right? So just trade one contract until you get really comfortable. Always treat options as stocks. I think this is the most important rules I learned in the past 25 years. It took me 25 years to learn it. I'm still learning, but this is a work in progress, right? This is work in progress, and the more experience you have, the more mistakes you learn on your mistakes, on other people's mistakes. It has to be engraved in your mind. That's why you have to physically write it in a journal every single day. Write these three things down: patience, patience, patience. Wait till end of day. Whatever the exercises are, but that's what you do. Sunil, thank you. Yeah, XLU underperforming, XLP underperforming, right? Kind of in free fall, XLU, XLP. These are the signs that the bull, or the final signs is XOP, right? Energy. Everybody was hiding in oil. We all heard about this. Russia-Ukraine war is going to continue. They're turning off gas supplies in Germany, and oil is going to 200. And all of a sudden, XOP drops from 150 to 128. What is it? 30% drop? How much is this? Yeah, 25% drop. Right? Why would the oil companies drop 25% if all this issue, or why the interest rates are dropping? The main reason is the bull market is over, right? There are certain asset classes like oil, like materials, they were in the bull market even prior to this week. Effective of this week, they are all, in the beginning of the bear market, which is the reason why first spider sell-off has to accelerate because these asset classes have to pull back closer to what QQQ, right? QQQ is down 35%. That means oil at some point has to be down, 40, 50%. Next week, 3 weeks, I don't know, but I do know that at some point, XOP between now and October will probably be down, 50%, at least 50%, right? So the narrative is changing from hyperinflation. Now everybody thinks about stagflation, recession. So the narrative is changing, and that's why these asset classes are selling off, kind of forward-looking. That, yes, I think cover call. I believe that nobody will manage your money better than you, right? I've learned that kind of, when, I've been part of several publicly traded companies, and, in the beginning, I just gave all my money, to different, managed funds. They are tied to S&P. Very few will outperform an S&P. Very few, right? So the sooner I learned that only a few managed funds or money managers will outperform S&P, right? And I tried UBS and Fidelity, whatever you tried, I've tried them. Nobody can manage your money better than you. But it takes time, experience, it's a skill, right? I mean, if Fidelity guys cannot manage your better money than you and they're professionals, right? That means it's a skill and you need to learn it, right? It's not going to happen overnight. But if you're patient and you're learning, you're investing into these live trading rooms, you're constantly part of them, I do believe you will be able to manage money much better than any average money manager out there, because it's your money, right? You have to keep in mind the psychology, right? When it's not my money, then as long as I'm within S&P, I'm okay with it. When it's your money, you want to beat S&P, right? Cover call on S&P, or kind of looking at rebalancing your portfolio more accurately. That will help you to outperform. Sunil, thank you. Faith, thank you. Pat, thank you. Right. I mean, they're all, everybody just wants to be with S&P. S&P down 25%, you're down 25%, you're a hero, right? You did great. If you did 20% down, then you're really a superstar, right? But, to be down only 5%, well, then you have to do it yourself. Right? There's very few funds out there that are down less than 5% or positive today, right? Unless that was their intention, shorting the market. But then they had horrible history in the past, 10 years. But this year they're superstars because they're long short funds or they are volatility funds. Fine, they're great, but over a span of 10, 20 years, they're not outperforming S&P. All right, anything else? Meanwhile, expect volatility, right? We had spiders, we have expiration long weekend, so another reason, right? Oil is vertically moving down, right? That's positive for the market, right? Because part of the pressures were, gas, oil, and they're dropping, right? So that should give short-term relief to the market. And then going into the earnings, nobody wants to hold these long positions. Look at the XOP, unbelievable. China is, above the downtrend line. That's positive, way off its loss. Second largest economy. That's positive, short term, right? Short term. Treasury continues to rally. That's short term positive, sitting at the key support. 10-year key support. All right. Few announcements. One is YouTube, right? I know you all love YouTube. You don't go to sleep unless you listen to one of the YouTube channels. Tradespoon has a channel, right? There's always something to listen every single day. If you miss my voice, then please sign up to Tradespoon content, right? Click on subscribe. We're trying to grow number of subscribers. If you actually like content of any of those videos, do me a favor, please share them with your, if you know anyone who's trading or you're part of the Traders Forum, please share them. And also, we do have elite circle, right? You need hand holding. At this point, if you haven't traded in 2020, if you haven't traded in 2008, the best place to trade in the live trading room. You want to be part of community. We do have a community on Tradespoon. We have it on YouTube. We have live sessions. Scott and I, every day, going over our positions, our view on the market. Do not trade alone, right? You do not want to trade alone in this market. Paying $97 a month, $57, whatever that price is a fraction of a cost. Doesn't matter what portfolio you're managing. So don't trade alone. Elite subscription, you get access to all my trade ideas, recordings, alerts, and I encourage you to try it out. That's all I have for today. Thank you very much. Have a great day. Enjoy long-term weekend. Remember, a lot of volatility today. Nobody wants to hold long positions into the long weekend. Tuesday, we start all over again. All right, thank you very much, and have a great weekend, and happy Father's Day. If you are a father, and then happy Father's Day, happy, healthy weekend. Faust, I will do closing bell. Yes, I will be at the closing bell today. Yes, thank you. Take care, guys.